In this video, we're going to look at support and resistance. Let's take a closer look at what we will cover. We'll start by looking at what is support and resistance. We'll then look at how support becomes resistance and vice versa. We'll also look at the breaks of support and resistance. And finally, we'll summarize everything. So let's get started. What is support and resistance? Peaks and valleys, highs and lows are all levels of support and resistance. When I refer to peaks and valleys, I'm talking about the obvious and not so obvious ones. We'll take a look at some examples later. Resistance is the technical term for a peak or a high in the market. Support, on the other hand, is the technical term for a valley or for a low. Support and resistance levels are important because they are often obeyed by the market on multiple occasions. Support will, on occasion, turn into resistance and vice versa. Support is a floor that price bounces off. Price is said to be supported from dropping any further. Resistance, on the other hand, is a ceiling that price rises to and is then forced back downwards. The market is said to be resisting the rise of price. Major areas of support and resistance are the main peaks and valleys, while minor areas of support and resistance are the zigzagging highs and lows in between the main areas of support and resistance. Let's take a look at an example. Here you can see an example of support and resistance. Let's start by looking at the resistance areas. At the top of the image, you will notice a red, horizontal resistance line. As you can see, the white line represents price. Price rose up and hit the resistance line. At the first attempt, it hit the line and then fell back downwards. Price then moved upwards and fell just short of the resistance line. It closed slightly below and continued moving downwards. On the third attempt, price got up to the resistance level once more, went over the resistance level, and then fell back down again. Price has found it difficult to go beyond this level. Even though it went slightly above on one occasion, it still was pushed downwards. So this is a good area of resistance. At the bottom of the chart, you will notice a red support line. And here is the same thing. On the first attempt, price hit the support level and then bounced upwards. It came back down again, stopped slightly above the support level, and then moved upwards again. So that was the second test of the support. On the third attempt, price made it through the support level, just slightly below it, and then reversed and bounced back upwards. So this identifies a good area of support. Price is struggling to go below this level. One thing to remember is that support and resistance levels are not fixed levels. It is not an exact price. We generally consider the area around this level to be the area of support or resistance. Now let's take a look at examples of major and minor areas of support and resistance. On the image here, you can see that we have a major support and a major resistance. These are areas where price has turned around sharply. You will notice that price starts on the left-hand side, hits the major support level, and then bounces upwards. It's making its way up to the major resistance area, but as it makes its way upwards, it's meandering all the way up in typical zigzag fashion. The peaks and the valleys that are formed on the way upwards form the minor resistances and the minor supports. These are areas where price will react, but they are not as important as the major support and resistance areas. In an uptrend, price will continually break through resistance and use it as support. In a downtrend, price will continually break through support and use that level as resistance. A range is an area that price bounces back and forth between defined levels of support and resistance. Another example of support and resistance is trend lines. An upwards trend line provides support when it is sloping at an upward angle, and a downwards trend line provides resistance when it is sloping at a downward angle. Moving averages is another way to use support and resistance. Moving averages are well-known standard technical indicators, and they can provide dynamic support and resistance. Now let's look at another important aspect of support and resistance. Support becomes resistance. Support can turn into resistance. Price tends to bounce back off support levels, but if price breaks through, it will want to come back to test this level from underneath. Essentially, it'll be using the previous support level as a new level of resistance. Take a look at the image on your screen. On the left-hand side, you'll notice that price is above the support line. It falls down, bounces off the support line, and moves upwards. It then comes back downwards and breaks through the support level. Price then moves underneath the support level, and the support level now turns into a resistance level. As price rises upwards again, it encounters the resistance level and then falls back downwards. As you can see in this example, initially we had this line representing support, but when price broke below it and started moving underneath this level, it turned into resistance. Resistance can also turn into support. If price breaks through an established level of resistance, it will want to come back to test this level from above and use this level as a new level of support. Look at the image on the screen. On the left-hand side, we have an area of resistance represented by the red horizontal line. The white line represents price. Price rises upwards, encounters the resistance level, and falls back downwards. Price then rises upwards again, and this time, price breaks above the resistance line. Price continues moving upwards, it forms a peak, and then falls back downwards. When it falls back downwards to the original resistance line, the resistance line becomes support. Price finds support at this line, and then continues moving upwards. Now, while support and resistance levels are great at holding back price, there are often circumstances when price breaks through these levels, and these present us with good opportunities to enter trades. Take a look at the image on the screen. We have a well-identified area of resistance. It had been tested on one occasion and price had fallen downwards. At the second attempt, price moved upwards and then broke through the resistance level. This would be a good area to look to enter a buy trade. To summarize, support and resistance levels are important for two reasons. Price will have a tendency to bounce off levels of support and resistance. And if price can move beyond a level of support and resistance, it will want to keep moving. So both these reasons present us with possible areas where we may look for trading opportunities. If price bounces off levels of support and resistance, we can look to trade in the direction of the bounces. If price moves beyond a level of support or resistance, we can look to trade in the direction of price. So as you can see, support and resistance can be very powerful chart analysis tools. Thank you for watching the video. I'll see you in the next one.